Welcome, ladies and gentlemen, to another edition of Accounting 101 Made Simple by Jay Ham. Today's topics discussed, lesson number 8, will be non-current liabilities on the balance sheet, long-term debt. So, long-term debt is a company's financial obligations that are expected to be paid off in a time period of over 12 months. It is classified as non-current or long-term liability on the company's balance sheet. It also represents the non-current portion of any long-term debt that is due in over 12 months. The two main types of long-term debt include the following: notes payable and mortgage payable. Long-term notes payable is a liability account where a borrower records a written promise, which is called a promissory note, to pay back a lender. The maker of the note, the company borrowing the money, creates a liability to the other company, the company lending out the money, promising to repay that company back with interest. An example of notes payable is simply a loan issued or given to a company by the bank. For an example, say your company issues a note payable to Chase Bank for a $100,000 loan due in 24 months at 8% simple interest. Your company would receive $100,000 and increase its cash account and its long-term notes payable account for $100,000. The borrowing company would also make periodic interest payments to the lender as well at a rate of 8% based upon the agreement. Long-term mortgage payable is the liability of a property owner to pay a loan, usually from a bank or another financial institution that is secured by property. Any portion of the debt that is payable in a time period of more than 12 months is classified as a non-current or long-term liability on the company's balance sheet. The total amount due represents the remaining unpaid principal on the loan along with any interest that is due. For an example, say if your company takes out a $10 million 10-year mortgage from Chase Bank on January 1st to purchase an office building. Your company will record $10 million in the mortgage payable accounts, and they will bifurcate it between $9 million in the long-term mortgage payable account and $1 million in the current mortgage payable account. Problem time. Question 1. ABC Company issues a 36-month promissory note to TD Bank for $300,000. How would the company classify this on its balance sheet? A. As a non-current asset. B. As a long-term liability. C. As a current liability. Or D. As a current asset. Now, always be cognizant of the permanent side note that I put that's associated with these multiple choice questions, and that is when solving multiple choice questions, always eliminate the obvious wrong answers to increase your odds of answering the question correctly. So what can we immediately eliminate as potential answers here from the 4 that we have? Well, based on the question is structured as a liability question, so we could immediately eliminate all of the answers that has assets associated with it. So A, non-current asset, we could rule out, and also D we can rule out because the answer to that is a current asset. So we're left with B and C. So let's visit C, current liability. Is this a current liability? It is a liability based on the facts of the question, but is it a current liability? No. And the reason why it's not a current liability is because the ABC Company is issuing a 36-month promissory note to TD Bank. And because the 36 promissory note runs greater than a year, it's not classified as a current liability. Rather, it's classified as a long-term liability. So we know the answer to question 1 is B, long-term liability. In the next video, lesson number 9, we will cover the following topic: shareholders' equity on the balance sheet, part 1, outstanding shares, and additional paid-in capital, also known as APIC. Ladies and gentlemen, if you like my work, please hit the like button on this video. Please subscribe to this channel. Please share this video on all of your social media. And please be sure to sign up to become a Patreon member to enjoy exclusive benefits such as one-on-one consultation, one-on-one tutoring, and a more intricate accounting exam to enhance your learning experience. May God bless you, and see you in the next video.